Started. Yo, what's good, people? It is currently 20 minutes past 10 p.m. UK time, 10:20 p.m. UK time, Sunday, the 22nd of June, 2025. Welcome to another amazing episode of Technically Speaking, which is a free weekly webinar every single 10 p.m. to 11 p.m. We invite everybody and anybody of all ages, ethnicities, belief systems, and also, of course, experience in the markets. Typically, every Sunday, 10 p.m. to 11 p.m., you can find the Zoom link in the blockchain.sensei IG bio. I say typically because I missed last Sunday because it was my 30th. I was intending on doing a stream Monday, Tuesday, but I got busy. But I'm happy to confirm that this webinar will run for most of 2025, given certain exceptions, such as my birthday. So, before I get into the stream, I want to iterate one thing, and that is why I do this stream at Blockchain Sensei. The number one reason why I do this stream is actually self-accountability. I want to be able to present information and my opinion with regards to the markets, what I see, what I know, what I think, and just to hold myself personally accountable so I can be better at the market. I encourage everyone to do this as well, in their own way, whether you want to tweet or maybe you got like a WhatsApp group or whatever. So number one reason why I do this is for self-accountability and to make sure that I'm always sharp. Second of all, one of the reasons why I give out information is actually so information comes to me. I'm super happy that in December I reviewed a report on Pengu, and now one of my guys called Toby, who's a chef, he's got into a very, very exclusive crypto group, which I'm going to talk about off stream. This is why you guys should come to the live webinars. We typically do an hour or so recorded and an hour or so unrecorded, when I mainly talk about degenerate shit and meme coins, etc. Before I get started, just to iterate, I'm not a financial advisor. Nobody in Blockchain Sense is a financial advisor. We do not intend to be perceived or received as financial advisors. However, we'll work in collaboration with several accredited advisors. If you are in seek of financial advice or any other professional services, please get in touch and we will see what we can do for you. I'm going to come off camera as I'm just on my phone just to say hello, and then I'll get into the data sets. What else did I want to say? Yeah, come live because only half of this stuff is recorded, and yeah, let's get to it. Let me just leave this room. Hello, can you guys still hear me?
Yep. Yeah.
Yeah. All right, perfect. Okay, let's get into the data sets. Okay. So let me go through 2 weeks worth of tweets on the Blockchain Sensei Twitter. Now, actually, before we get into this, let me just address the elephant in the room, which is World War III happening or not? Should hope not. The latest from Trump is from 21 hours ago, we've completed a very successful attack on 3 nuclear sites in Iran, including Fordo, Natanz, and Esfahan. All planes are now outside of Iran airspace. A full payload of bombs was dropped on the primary site. Fordo, all planes are safely on their way home. Congratulations to our great American warriors. There is not a military in the world that could have done this. Now is the time for peace. Thank you for your attention on this matter. Okay, so there's obviously a lot of sell-off in the market right now. However, what is the number one driver of medium to long-term price action. Of course, it is liquidity, of which all my data and research points towards rising liquidity into 2026, potentially an extended bull market into 2027. But I don't want to overly predict. Okay, where are we? As you can see, liquidity has been trending upwards since the 2nd of May, and I could expect this trend to continue. Let me see what latest I have on Blockchain Sensei. Part of me wants to do chronological, so from 2 weeks ago and upwards. But so 2 weeks ago would have been the 8th of June. I kind of want to do a mix between chronological and whatever the opposite of chronological is, dechronological or something. So I just want to close in tweets that I did, as in the latest, and from 2 weeks ago, kind of close in on everything that was said. So, oh, 1 second. I'm going to start off with tweets from this string here that I started on the 19th. So, let's have a look.
Ninja.
Yeah.
Hello. Are you sharing the screen?
Oh, I'm not sharing my screen, am I?
No.
No, I'm not. Thank you. All right, okay, so what I want to do is that I just want to have a look at the latest signals from my professor. So Professor Adam, who's a crypto investing master at andrewtatesuniversity.com. He's one of my main sources. So the latest signal in something called is LTPI and MTPI, so long-term probability indicator and medium-term probability indicator, in which is engineered. The latest signal is that we are still pretty bullish in the long term, but hugely bearish in the medium and short term, which makes sense, right? Because of all the war and uncertainty. This was a signal from yesterday, which is pretty much the same from today's signal. And then this was the signal from 1 second. This was a signal from the 19th. And as we can see from the 19th, if we focus on the medium, to the 20th, we go down a little bit more, to the 21st, to today's one, we can see that the market is de-risking. What did I say so the last stream that I did was 14 days ago on the 8th. Let's see what I said on the 9th. That was talking about the stream on the 8th. Sunday cancelled. Okay, where are we? So, something from CryptoGit on the 10th of June. China has injected 139 billion of liquidity a few days ago. Europe has cut interest rates. ETH ETFs have seen only inflows since the 19th of May, which is the largest period without sell pressure so far. We're seeing stealth quantitative easing occurring in the US. So far, everything is great. We just need that to be reflected on the charts. Obviously, this was before the escalation of the Iran and Israel war. However, this is why I say all pullbacks and fear in the market, I believe, are buying opportunities. And I'm super excited because the buying opportunity has increased since Dogecoin is like 14, 15 cents last time I checked. We will get into TA later, but I typically like to have a look at macros. What else did I have a look at? Okay, so from cross-border capital, we can see that the prediction of global liquidity, what did I put here? What was the point that I was making here? Sometimes I take so many notes, I forget what I was trying to say in the point. Obviously, I don't want to read every single tweet to you guys. Okay, let's have a look at this. Okay, so we can see here that according to this model, we are so basically, what is a TGA? The TGA stands for Treasury General Account, which you can get at my favorite website, tlx.fijisolutions.net. This has an inverse relationship to liquidity. So we can see that on this model provided by my professor that we expect for us to pull down till around the 9th of July. That was what the model was saying from the 10th of June. So and also on upon recent research as well, this general consensus of around the 9th of July has been the approximate model for kind of when we expect prices to slide down up until, which is fine because it gives us opportunity to buy. What notes have I got here? We're expecting, in terms of historical seasonality, for Solana to be seasonally strong into Q3, which falls into this theory here of the TJ because we're about to close the quarter in 9 days. Where are we? Okay, ETH. This is quite funny because on the 10th of June, which is 12 days ago, I was saying that the technical analysis on ETH was looking really, really good. But the thing is, with technical analysis, it can be invalidated. It can be invalidated when there's world events, such as what we're going through. So I'm going to go back to macro stuff first and on-chain, as I don't like to go to technical analysis first. But just to reference that, we can see here that ETH has definitely broke its trend. But we can see that in terms of signal-wise, we're getting very close to, not price-wise, but signal-wise. On the RSI, we can see here that we're pretty much getting the same flash buy signal as when the Trump tariffs were going crazy and the world hadn't decided yet where its sentiment lied within that. Okay, so some of the things that I thought was very, very interesting. I was watching my homies Financial Navigator and Cryptosi. They've got a show on YouTube called Crypto Waffle. In fact, I was a guest on one of their shows about 8 episodes ago. Let me just share their channel because I would definitely recommend that you tune in. You just type in Crypto Waffle. You could type in Crypto Waffle Ninja T, which will bring you to their page. Yeah, so I was watching one of their latest episodes, Israel versus Iran, and I thought these data points were very, very interesting. So USDT, which is the biggest stable coin in the world, with a market cap of $155 billion. As of Q1 2021, Tether as a company holds approximately 120 billion in US treasuries, so basically US government bonds, making it the 19th largest holder of US debt globally, surpassing countries like Germany. So USDT has more, they bought more US debt than the country of Germany. And in 2024, they reported as the seventh biggest buyer of US treasuries amongst countries with net purchases of 33.1 billion. Basically, I used to always think USDT was fallible. However, and big ups to the homies for telling me about this. The majority of basically, there's Justin Sun, who is the founder / CEO of Tron, and he was at the Trump dinner recently, where you had to pay, I think, about $500,000 to have dinner with Trump. Now, the majority of USDT transactions happen on which network? Believe it or not, it's not Ethereum. It is actually Tron. And basically, what I'm watching out for is a Tron season. We had a mini Tron season sometime this cycle, but this is something that I'm gonna be looking at. What else? No, I can skip that. Okay, so let's have a look at the facts. Let's have a look at these notes from the 19th to now. Yeah, so the signal for the past 4 days has been 100% in cash. I was speaking to Salman, who's on this call, who's one of my super loyal clients, and I was saying how oh wow, Dogecoin is in a bargain price right now. Okay, amazing. Yeah. I was very bullish, very bullish on this quarter. In the sense that we've reached these ultra lows. So we entered the quarter here, right? Which is 31st of March. And I was super bullish on this quarter, which I was right about. Understanding that any crashes were opportunities. Now, did I expect the market to crash and recover as quickly? No. Which is why I didn't make as much money as I expected. And I pretty much exited a lot of the market just before my birthday because I noticed that the market produced a lower high, right? So it didn't beat the previous high, which basically told me, okay, cool, we're gonna de-risk, right? For those that missed this area here, and this was the ultra fair. I'm gonna call it UF ultra fair. I don't know. Sorry, my bad. Coin market cap. I don't know if we're gonna get this exact retest, but please understand that if you're in crypto majors, such as Solana, right, and we reset to anything close to where we were in early April, it's a huge buying opportunity. I don't think we're gonna get there. I don't think we're gonna get there, but you guys need to understand that this Iran and Iraq war is a distraction in the sense that the market cares more about what Powell says, and I would recommend you guys watch the recent speech via Blockchain Backer. I feel like Blockchain Backer is the best online YouTube content creator for cryptocurrency information and data. So you can watch his latest live. He does a live show every single Wednesday, and he's basically reacting to the rate decision. And TLDR, because I watched the whole thing. Basically, Jerome Powell said He expects employment to go up. He's confident on inflation remaining at 2%. However, they're still holding off interest rates, holding off lowering interest rates. We can see here that according to 42 Macro, which is an online investment research provider by Darius Dale, it's very respected in the game. They post kind of a daily report. On the 19th, we had a VAMS model, like a range of 113 to 102. We have since hit that range, actually just below. Okay, BTC at 99. Yeah, I think the lowest Bitcoin will go if I were to put a bet on it is 93,000. I do not believe that will go lower than here before recovering. I'm already seeing us basically look. I think of it like this, right? So let me take my RSI here. Price wise, I don't think it's possible for us to go this low because the market cares more about interest rates and global commerce than this individual Iran and Israel war, which I believe is a distraction to get people to sell off. I think the lowest it can go is around 93,000. That's my my current sentiment. Okay, we've got a message. Oh, okay. Let's read an article by Thomas on markets. And then we'll have a look at some data sets on this string. Okay, so remember, the Middle East tension moves oil, not stocks. It can move the stock market and crypto as it has done temporarily, but not long term. Israel and Iran are at war. Missiles are flying over the Middle East. The price of oil has been spiking, and social media is full of World War III talk. What does this mean for financial markets? Will risk assets like stocks and Bitcoin be negatively effective? And at what price of oil is this important? Let's have a look. Okay. I don't want to read all of this, but basically, TLDR, gold is still the risk-off king. We're at gold all-time highs right now. Though I do believe people are not ready for the big gold crash, which is totally inevitable because this cannot be a sustained rally. We cannot maintain these insane 78% gains in the past 14 months. This will retrace. I wouldn't be surprised if gold retraced like 2,600, 2,500. But yeah, gold all-time highs is sentiment of risk off. Maybe a screen. Did I do a screenshot? One second, guys. 1 second. I think I screenshotted like the most important points of this article. Yeah, gold is still the risk-off king. And the main takeaway is nothing ever happens. While it can be concerning to see worrying geopolitical headlines all over the news, it's often best to fade these geopolitical events. History shows there is rarely a lasting impact on risk markets. Crude oil will be the most important price to track regarding the conflict, with potentially big implications for global inflation. Although it may already have topped for the time being and is likely to spike a lot higher unless Iran presses the block Strait of Hormuz button, and even this action would likely only have a temporary effects. That's for this edition. Catch you for the next one. Thank you, Thomas. Let's see if we've got an update from Thomas. Basically, guys, although I'm going to dive into more and more data, okay. don't think Thomas has really said anything. So the market expects there's a really important point there. Just clicked off it. Give me one sec. The market still expects the next cut to be 25 basis points in September. What this means is 25 basis points and 0.25% in interest, which is good for the market, which is a liquidity injection. And I believe the market will price this in. And I am pretty bullish, in my opinion, as it stands as of around the 9th and the 10th of July. So I repeat, my sentiment is I think the market will bottom out in the next 18 to 21 days. Even though I don't overly like predicting time, let's see how right I am. So there's a model here called the GLI, Bitcoin versus Global Liquidity Index. This was the GLI a few days ago. To just bring it to the present, we can see here, Bitcoin is now falling slightly below the fair value of all the liquidity in the world. Global liquidity, which is the available cash in the system to invest in risk on assets. What other notes have I got? I got some good ones here. So again, the signal right now is 100% cash. This is the signal for the past few days. Now, for those that have been on my previous streams, you'll know that I swear by a website called charts.checkonchain.com. I recommend you go to dark mode, and then there is a few indicators that I check regularly. Let me just delete this. One of the indicators that I check is the short-term holder SOPR. So you basically click here, SOPR. The short-term holder is anybody who's been holding for 155 days or less. We can see here that we are pretty much retesting the midline, which is often an area of support. Oh, sorry. Let me go back. Oh, I've lost it. Yeah, so often this is an area of support. Now, obviously, that support can be broken, and then we could see this decline further, which basically would be a buy zone. Basically, it's 4 buy zones. This is buy zone 1, 2, 3, 4. So even right now is a good time to DCA, in my opinion, according to this metric. Then another one is that we've got the short-term holder supply in profit and loss. So you basically click this one here, P&L. This has also reset back to the midline, which is often an area of support. I'm not saying that we can't go further, but this is a good buy signal flash. We can't always time the bottom, which is why I recommend dollar cost averaging. And then another metric we like to look at is what's called the MVRV. You basically just click here. They're right next to each other. Charts.checkonchain.com. Go to dark mode if you want. I can go to light mode. All these indicators are right next to each other. So this right here, we have also touched. Well, we're almost touching the midline, which is often an area of support. For example, here. What's going on over here? Wait. Here is possible to go lower, but this is the first signal to DCA in. Then we have got this here. It's called the perpetual futures excessive days, and the way you get to this page is you just type in excess days here on the funding. We can see that funding, so basically futures and leverage, is starting to climb up here, which means that it often means that big monies and institutions are entering the market because we have leverage positions building over here. Then what else can I see? Okay, so this is a data set from my professor, and it's basically the Bitcoin exchange liquidation map. So basically prices where people doing futures or the market doing futures would get liquidated at. And the market is obviously here to take your money and not give you money. We can see here liquidations basically building towards the short size. And this proved to be correct because we have since on Bitcoin gone below the 100K mark, which I believe is a huge psychological level, which is why I do believe that we need to find some kind of support. I believe more likely towards the downside than the upside. Also, just technically speaking, we can see here on the daily, as of the 10th of June, we printed what? A lower high. Okay, so we need to find some kind of support. I don't believe the support is quite here yet at this level. I think it's more likely we go down to 93. However, it's not always about overly predicting, which is why my systems do tell me to start dollar cost averaging even at today's price. We expect a TGA stimulus. So basically more money going into the TGA, which takes it out of the Fed net liquidity, which would be reflective in a decline in risk on assets. Another metric on checkonchain.com, which I like, it's called the short-term holder supply and profit and loss ratio, but I like to call it the Rastafari indicator because of the red, gold, and green. Basically, this shows the amount basically Bitcoin holders in loss and Bitcoin holders in profit. The higher it is, the stronger the sell signal. We've basically reached a break-even midline here. We've reached a break-even midline where holders of Bitcoin in the past 155 days are pretty much in break-even. Where on this line here, it means that 95% of people are in profit, and this is where a lot of profit taking happens when you go above this line here. It is possible for us to retest this low here. However, this is basically the seventh indicator saying, dollar cost averaging at today's price, even though it's tempted to wait for low prices. So let's have a look at liquidations from CoinAnk. You can literally go to the CoinAnk website yourself and then get these liquidations. We can see that on the 1 week we have liquidations below, which proved to be true because we went below 100K as of very recently. The 2 weeks are supporting the 1 week, which is again more downside, which falls in the line of my theory of us declining for the next 2 to 3 weeks around the 9th to 10th of July. And then the 3-month liquidations below current price are increasing in intensity, and the 1 month 1 month has thick liquidations below at 85K, but a lot of the times when there's thick liquidations at a price that is relatively unreasonable / unlikely for it to go to, it just means they're pulling that direction, not necessarily to the price of the thick liquidations. So let's have a look at some seasonalities. So seasonalities means, historically speaking, the average price action of an individual asset during a certain time period. Obviously, past results are not guaranteed a future performance. However, we can use them as an indication of. So, seasonality wise, July, August, and September have been what? Bullish months for Bitcoin. Got more. Yeah, Ethereum seasonality also supports this in July and August, with a cool down in September. According to multiple data models from 42 macro, cross-border, capital, etc., we expect global liquidity to keep rising into Q3. And there's forward-looking research that suggests that we would get a pullback in Q4 and then bullish again Q1 next year. Of course, models can change, but that is what's indicated at present. So then we've got Solana, which seasonally speaking is very bullish in July, August into September, which is again bullish for Q3. Dogecoin not so much actually, which is why I want to be very careful. Even though I believe Dogecoin is going to do really well this year, I will be careful on over allocating for July and August, depending on your time horizon. Then we've got XRP, which seems to have amazing seasonality into July, August, and September. And historically speaking, it's XRP often actually booms last. So then we've got Aave, which is the biggest loan provider in all of crypto. Also seasonally bullish in Q3 all the way into Q4. I think that's a sleeping giant, to be honest. Tron, seasonally more sideways, but I don't have any Tron, so I don't need to worry about that. Render, which is one of the biggest AI tokens available on Solana, has, according to historical data, been bullish in July and August. And Chainlink, which I don't really hear many people talk about anymore these days, is historically bullish on July and August. So I did say if Solana seasonality proves to be true, we will get a real light up of the trenches in Solana. I'm going to skip this because this is to do with portfolio management. Skip this. Let's read this. Okay, 42 macro. Let me read this. The current free money era, marked by massive fiscal deficits, near zero interest rates, and quantitative easing since 2008, has led to unchecked monetary expansion, with the Biden administration's yellow onyx exacerbating the trend by funding spending through short-term debt monetized by banks. This has fueled monetary inflation, driving gold up. Okay. Banks' balance sheets expanded significantly as they hoover up this preferred short-term paper, effectively monetizing the federal deficit. It's essentially the same as JP Morgan cutting a check to the government. Consider the chart below, which I can't see. Treasury holders capacity. This confirms that we are entering a more rapid monetary inflationary world. Okay, this is the most important thing, and this will ultimately drive faster high street inflation. Basically, money printing, and it ends badly for the economy, but it's temporarily very good for asset prices. The PBOC, the People Bank of China, which is the second biggest liquidity provider in the world outside the Fed, has been doing nothing but pumping money into the system. And we can see here that we are closing in just below fair value. The further we are from fair value, like here in April, the quicker Bitcoin rises to match global liquidity. I hope that makes sense. We can see here that the Bitcoin futures open interest, or open interest is basically longs. sorry, not longs, leverage in the market. We can see here that it's retested the one standard deviation line, which basically means that we're expecting more perpetual futures in the market, which exacerbate the direction. Remember, futures, more leverage in the market doesn't mean up or down. It means that if we go up, it's likely to go up faster and with more velocity. And if we're going down, we will go down faster with more velocity. And what direction are we moving in? Down. So I expect us to move down. I expect us to move down quickly and sharply, and for us to recover quickly and sharply. This is why you guys need to, like, you literally need to be a sniper and decide what the fuck you want to buy in this crash. That's what everyone needs to decide. I think Aerodrome may test 50, for example, like 48 cents if we were continuing to decline, or 53. However, actually, I can't deny that there are many signs that are telling me that we may be entering a base season. 1 second. That is DeFiLlama.com. Okay. And if I go to the base chain, I cannot deny that this is constantly rising versus maybe it's all rising. Base. Thought my eyes saw something very special when it came to base. I can see the TVL. Well, we're about to smash all-time highs in the TVL, which is the total value locked on the chain. Let's compare this to something like Polygon. Okay, so Polygon's in the gutter. Aptos is surprisingly doing well, although taking a bit of a pullback. Bearer chains fell off a cliff. TVL for Tron, not so high because it's mainly for stablecoin transactions. Binance Smart Chain also currently in the bin. Ethereum, very, very high from all-time highs. So yeah, Sui on a slight decline, but Coinbase seems to be on a constant rise, which is in line with the stock. Story. I wish I caught more Coinbase stock. Wow, Coinbase stock that is insane. Wow, it's done 2x since the since the tariff crash. Okay, this cannot be ignored. I do believe we're going to see a Coinbase season. Okay, so let's go over some TA. I'm going to go to this chart here. Right. I believe that this here is a very good watch list. Okay, so Aerodrome, one of my top picks on the base chain. This is basically the Uniswap, so the decentralized exchange, the biggest decentralized exchange and liquidity provider on the base chain. And I've heard rumors that they're going to integrate or injects liquidity from Coinbase's centralized exchange pool into the decentralized liquidity pool, which is probably one of the reasons why this is holding up so strong, in line with Coinbase rising. When did I make an entry on this? Around the 21st. Yeah, on the 21st of May. I should have definitely DCA'd back in at this price, but that's okay. I do see this falling. Yes, I do. Okay, in the 6 hours, I've just basically caught it here, the 1020 crossover. So, Aerodrome, we can see here that it has declined as well. It's declined in terms of making a higher high. So, if this market continues, I would look to get some Aerodrome at 56 cents. Brett, which is the biggest meme coin on the base ecosystem. Wow, this is actually a fantastic price. Yeah, there's some crazy price action as well. If you caught this on the 6th of April during the Trump crash, could have sold 1 month later at a 4x. That is insane money. Right now, do I think it's a good time to buy Brett? Yes, I do. Yes, I do. What price do I think Brett's going to go down to? Potentially 29 cents. I see this RSI retesting here to around the 30 zones. But it's definitely not a bad time to buy Brett. Then we've got AIXBT, which oh my god, had the MACD as well. Yeah, that is a straight retest of price. That's 3.7x there. How low do I think we could go? 8 cents, I think, is the lowest. However, that's a clean RSI retest. Straight on 30. Have a look at Miggles. Again, clean RSI retest on the 30. And this is pretty. I think this might be the lowest Miggles can go. This is the basic. It's the biggest cat meme on the base eco. Oh god, these are generational prices right now. And then virtuals is basically like a AI agent infrastructure. So let's have a look. Have a look at the main ones, the whole market. So we've just had a daily crossover on the 1020, though it may be a false signal like here. I believe 3 trillion is a huge psychological level in terms of the entire market. On the 4-hour, this is the lowest we've been. It's the lowest we've been on the RSI since the ultimate Trump crash here. This is why I don't think we're going to go this low again. The RSI is mathematically calculated. Oh my God. I'm now thinking, is this the bottom? Is Trump fucking with us with that tweet? It might be the bottom, guys. Or if it's not the bottom, another scenario could be it's not the bottom, but we basically meander sideways whilst everybody thinks we're going to go lower and then we don't, and then continue upwards. I've also seen shit like that happen in the market. Again, with the 4-hour time frame of all of the money in crypto minus Bitcoin, the RSI is flashing a buy signal, the same as the Trump tariff. It's not time to be bearish, guys. Total 3 also on the 4-hour is as low as we were during the alter tariff fear. If we go to the daily, we can see we have a little bit more room to go. Okay. But this is a fantastic buy area. Even ETH. Like we touched 2.1. Oh man, I think I want to buy. I might want to buy just a refund trade. I can literally, my eyes can literally see here. Look, if you break down to the 1 hour, we're consolidating and it's not going down any further. Oh, where are we with Ton? I super believe in Ton, but I just don't remember when to break out. All right, guys. Let me leave it here. Yeah, everything that I'm seeing tells me to DCA, even though I believe the market could go down further. I'm going to stop recording, and then I'll take any questions from the boys in the Zoom.